Hi. So today I just want to briefly provide a little bit of information about some of the basic reports that you as a business owner will see quite often, but just need to understand and be able to interpret in some respects. So the key reports that you'll see from your Xero, for your QuickBooks, from any conversations you might have with any of our team or with your accountant themselves, they're really going to cover things such as the profit and loss, the balance sheet, and probably your aged debtors and your aged creditors. Now, in accountancy, we have terms for things, just like everybody does in their own sector, but to try and make it clear what they are, I think it's useful just to explain. So your profit and loss is, as far as I would explain it, it shows whether you're making a profit or you're making a loss on your business activities. And basically what that means is it shows your income or your billings, less the costs of delivering that income. And then you've got your overheads, which are your running costs of your business. And all going well, you'll be making a profit at the end of the month or the end of the quarter or the end of the year. So that's your profit and loss. Obviously that's the most important document you have, because if you keep an eye on that, you should be able to see throughout the course of the year that you're making a profit or a loss, or you can see it change from a hopefully a loss up to a profit, and that then gives you a good pulse of what's happening in the business. The other one is your balance sheet, and your balance sheet is really all of the assets in your business, the liabilities in your business, and whether you have a certain amount of reserves or profits, I might call it, remaining in your business. So it's all the things like your equipment, laptops, cars are all part of your assets. Your bank balance is part of your asset. And then as part of your liabilities, it's the things that you owe money on. It's your VAT debt before you've paid it. And also then what your reserves show is that the difference between your assets and your liabilities is the remaining profits left in your business that haven't been taken out one way or another. And basically your balance sheet, it should be showing a positive net reserves, which means you're going in the right direction. If it's showing a negative net reserves, that means you've got a problem. It means you're making a loss. It means you're taking out more money from your business than it's making, or it's flagging up something else that's potentially a problem. So that's probably the key thing around the balance sheet. And then your aged debtors and your aged creditors are really about the money that you owe to your suppliers that you haven't yet paid against their invoices. That's the aged creditors. Or your aged debtors is basically all of the invoices you've issued to your customers that have not yet been paid. So really, I think if you're going to focus on two documents, probably focus on the profit and loss and focus on your aged debtors, because that's showing you whether you're making a profit or loss and how much money you're owed by your customers. The rest are important, but for a non-accountant, non-financial person, they're probably the two reports that are most important.